All right, folks. Now, the first week of the Iran conflict, my guest, it was about a month into it, she remarked that we were in no man's land. But she also made several points that even at that time, the market was oversold. I want to bring in now BDA Capital Partners CIO, Barbara Doran. And Barbara, I'm going to give you credit, right? Because not only did you say the market was oversold, you actually mentioned some stocks. You say, hey, if people do want to go in now, consider Meta, consider Robinhood, consider Lilly. If they took your advice, 31%, 31%, 3%. That ain't bad. But are you surprised at how quickly this market has rebounded?
No, because we've seen this over and over. Because what was interesting was the retail investors 2 weeks ago, there were a couple days where they were actually negative in their selling. But we also know when the smoke clears, and certainly with the Iranian situation and looking like they were negotiating, that's when it took off because no one wants to be left behind. You referred to it earlier.
Yeah. And you know, the thing is, though, sometimes I feel like maybe the experts are too caught up in being, we don't know how long and what this is going to do, and they have all these different variables, and these markets are moving quickly. You miss these turning points, you can miss a lot. No,
it's true. It's like the argument against market timing, which you're always telling your clients. You can't time the market because when you look back in history, the big moves are made in a matter of days and weeks. And so if you're out waiting for the signal, you're going to miss it.
All right, now a stock you have been pounding the table on. Again, I'm going to give you props because you've been right on. This is stock of the day, GE Vernova. Just absolutely phenomenal. Their equipment backlog is up. They've generated a ton of free cash. The guidance is higher across almost all metrics. This is the #1 stock in the market. There are others that are higher percentage-wise, but considering its heft and its implications, this is phenomenal. You've been on top of it. Are you staying with it?
I think you have to, because when you look at it, it's not just a one-year situation, because what's happening with CapEx and the data centers and AI, this is going to continue for some time. So there will be moments when it gets temporarily overvalued, and it will be subject to profit taking. We do have, things happen in the market, people get scared, this will be hit, but it's always going to be a good opportunity.
It's made such a big move, though. If you're in it comfortably, those big hits you don't even notice. You don't have to panic about them.
But this is also where you trim back a little bit, keep your position size manageable. That's about risk management.
So let's talk about software then, on the other side of the coin here. I thought this is really great stuff, right? Carlisle, essentially a survey of why people are using AI. And so the most internal headcounts, legacy infrastructure, consultants, no really meaningful reallocation. In other words, where are you taking money from to put it with AI? Look how little, only 11% says SaaS, and yet we see the action that's happening there. Maybe it's suggesting that maybe all of it's sort of overblown, the software sell-off.
Well, at the moment, you can argue that it is overblown, but the problem is we're not going to know a year from now how many people, how many of these things will be displaced by AI. But when you look at things like cybersecurity, you're not likely to make your own homegrown version because it's too serious. So there's pockets in there we can be pretty sure these are good buying opportunities.
All right, so let's talk about that. Some software ideas you like: Microsoft, CrowdStrike, and Palo Alto Networks.
Yeah, well, those Palo Alto and CrowdStrike, they have slightly different takes on things, but these are two of the leaders in the cybersecurity space. So anytime, these stocks get sold off, I think they're buying opportunities, and both, interchange ones. Microsoft, we know how good this name is in the AI, and there's always, right now it's been a little bit moribund, and people are saying, well, they're not going to be there, but they are a leader in this area.
And what I thought was intriguing, like with CrowdStrike, and I'm not sure Palo Alto, but I'm pretty sure they're partnering with, the Claude, and they'll probably partner with OpenAI. And in terms of these products, instead of taking them over, they're going to more or less incorporate them, aren't they?
Right. Now, Charles, that's an excellent point, because that is how they are using AI to make themselves even better and stronger. So I think and they're also advising these AI companies.
Yeah, exactly. All right, let's talk about some ideas here. Intuitive Surgical. I got to tell you, this is a name I've loved for years and years and years, but it just keeps going. They just had an earnings report. The numbers almost speak for themselves here.
Yeah, they do. But the stock is down 14% year to date, even though it's up 7 to 8%, because there's been two concerns. One, it's always expensive, and it always will be, because it's the gold standard. They have 80% market share, and of course, Medtronic is trying to, get some share in there, and J&J has some products coming out. They have to go through regulatory approval. In the longer run, they could be a factor. But, they just reported blowout numbers yet again. And this is, for now, I think is a core holding.
Yeah. Let's talk about Reddit. Reddit's another name that's pulled back here. It's trying to make its way back. But down here, you think it's attractive. I mean, think about it. It was $260 a share not long ago and hit 120.
Yeah, well, Reddit, the question here is going to be about execution because they have huge potential. They have 121 million daily active users, which are really under-monetized.
Right.
Their main sources of revenue right now are advertising, some 85, 90%. They've improved their ad targeting with AI and all that, but their real opportunity is in licensing their data, and they have really attractive...
I think OpenAI gets more of their data from on the training side from Reddit than any other source. I got 30 seconds, but I got to get Netflix in there. So ironically, you know, I see Netflix more as in jeopardy than, let's say, an Intuitive Surgical. But we've got the free cash flow, which is this red bar. It's just phenomenal.
Yeah.
The phenomenal, and the stock price has been somewhat suspect. A disconnect, maybe?
Well, I think so. I mean, because people, well, we know the Paramount bid. People are like, well, do they have no other sources of growth? What are they doing there? But when you look at, and also their guidance, they did not raise their guidance. So people said that's not good. But when you look at the user engagement metrics, they're very strong. They just did a price increase, and retention was better than expected in that case.
Right.
And their original content, which some 70+% of their subscribers love, is 60%, 55-60% of their portfolio. Plus, they have the advertising, which last year was just 3% of revenue.
Right.
This year, anticipated to 6%, and it'll just keep going.
And I'll pay them $1 gazillion if they stop the ads. Barbara, thanks a lot.
Yeah, thank you.
Appreciate it. All right, folks.